Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guests is Gary Van Bortel and John Bilinski. Thanks for being on the show, guys.
Thanks for having us.
Thanks for having us, Whitney.
Yeah, my pleasure. It's been just amazing to see what's happened in you all and what you all have made happen. I know it has not come without a lot of hard work. And so I met you guys. We were trying to figure it out if it was a year ago, year and a half ago. I can't remember now. And you had me speak at a meetup, which we're going to talk about a little bit, I know. And then you all have closed the deal and made some big things happen that we're going to discuss today. But a little about Gary and John. After both learning of apartment syndication in 2019, John and Gary met at a local REI meeting in Rochester, New York. They partnered up with the purpose of acquiring commercial multifamily properties together. They immediately started their own local meetup group called the Upstate Commercial Apartment Investors Group, which is focused on discussing and acquiring larger multifamily properties. They started in Rochester, but they've now expanded to the Buffalo and Syracuse markets as well. They've closed now their first 48-unit property in early 2020, just prior to the COVID-19 pandemic. So COVID-19 has created several challenges which they've had to overcome, but they are hard at work to find and to purchase the next apartment building as well in upstate New York area. So guys, welcome to the show. I look forward to just hearing more about the story. It's so often we hear too, just the first deal is the hardest one to get to, right? And so I love hearing how guys made that happen, guys and gals. But I think listeners, they can be inspired by that. They're going to learn a lot from you all and just some crucial steps that you took to get to that 48-unit deal, get that past the closing line. And I'll tell you, most of the time, I would say over the last few years, people have closed deals, but then they didn't have a pandemic, just right after either. So you all had some of the challenges that, that you've had to overcome that a lot of people haven't, but I know we can all learn from that. So get us started a little bit. I'd love to know, you all created this meetup or you met, and maybe you can speak briefly to how you all vetted one another, how you knew this would be a good partnership. There's so many partnerships that don't work out, but yours has, thankfully. How did you know? And, what was kind of the thought process then? And let's work our way up to this first deal.
Sure. I'll start this off. So John and I met at our local RIA meeting. It was actually, I think it was the Christmas party. We had actually, I think John had heard that I had been going through a mentorship program to learn about syndication. And coincidentally enough, John had as well. Didn't know each other at all at that point. We got together, realized that we had very similar backgrounds as far as investing in multifamily, single family and multifamily, right up to that point. And I had started after learning about syndication to venture off on my own. I made a couple of offers, but I really didn't feel 100% confident. I didn't have anyone to bounce my underwriting off of. And John and I met. He reached out to me. We got together, realized that we complemented each other very well in our skill sets. And from there, we just started working together and looking for deals and working together.
I don't want to jump ahead too much, but maybe you can highlight there, because I often talk about that as well, as far as finding that partner that complements your skill sets. What were those skill sets? I get that question often too. Well, okay, what were you good at? Or what? Because I tell people, there's so many parts of this business. You have to have a team. And I just feel like when you're getting started, it's better to just own something, be really good at this thing, and then find somebody else that's really good at that other thing, that you don't have, and you're going to go further faster instead of trying to do it all yourself. But how did you all split those up? What were your skill sets that complemented one another?
Well, I could throw in there when me and Gary met. I know Gary said he already looked through a lot of deals, and I think one of the things I brought to the table that helped move the ball forward when it came looking at deals was I always looked at the what we could do kind of mentality. I always saw what was broken and said, well, if we fix that, we do this. This is what I see is going to come out of it. And I think Gary, that wasn't something Gary is built to do typically. He's very good at analytical, looking at stuff and making sense out of things. But seeing the what if we do this, and I'm very good at looking at things and trying to figure out how to make something work that's broken. And I think I kind of helped add that value in a sense of making something look more positive, even though it looks like a, big heap of mess. And I think that was a very, very big turning point for Gary, at least I believe.
Absolutely. And I'll say it's very easy to talk yourself out of a deal. You can talk yourself out of everything if you want to. And I'm an IT guy and I analyze things quite a bit. And John brings that to the table. He's very positive and was like, well, what if we did this? Or what, if we increase rents and do renovations? Our property that we did acquire was what we call a value add. So there's been a lot of, everything that we could possibly do, and we've executed fantastically over it. But that was huge as far as getting me moving forward. I kept talking myself out of deals, and John kept, let's look at it this way, and let's underwrite this way, and having that positivity really helped propel us forward.
Nice. Well, tell us, maybe we can move, we're moving towards that deal. How did you land on a specific market? What were your all's roles there? And how did you, just figure this real estate syndication business out?
Sure. So we both agreed that, we're both hands-on with our own properties. We self-manage them. We do all pretty much the repair work and maintenance that's required. So we're both very skilled in that aspect, and felt that if we did find a property, it'd be best to have one that we could easily get to, within an hour and a half or 2 hour drive. And that's proved to be, huge for us as we're learning. We are able to get out there and be more hands-on. So we looked for something kind of in our backyard per se. So anything in the Syracuse or Buffalo or Rochester area was something that would be very interesting for us. This particular property happened to be a part of a larger portfolio. I think it was 8 properties, which was, well out of our reach, but we focused on the one that we wanted and made an offer on it. The property portfolio did end up selling to one individual who then knew that we expressed interest. So it kind of came back around to us. His criteria, this property was a little bit more of a value add that he wasn't looking for anymore. He had been there, done that, and reached out to us.
So you saw this property, realized, and then it sold as a portfolio to someone else, and then that new buyer sold this property to you all?
Yeah, he reached out to us and he said, I'm going to close on these other 8 properties. And, he wanted to do like a double close, so he didn't have to hold it at all. We kind of hammered out the deal. We met at a coffee shop and discussed it, and, just made it happen. He was an excellent person to work with as far as a seller goes, and knew that this was our first opportunity, so that benefited us a lot.
Did you do the double close?
We didn't. I think we were about 6 months behind. Just there was some issues. Small things that we had to overcome, and we did that, but it just took a few months, just basically with the attorneys and the title policy.
Give us some of the some details about the property, the business plan, some things you all were expecting to do moving forward, and maybe we'll talk about some of the difficult parts of it as well.
Well, some of the things we ran across when we looked at the property, which we're blessed by the owner, he gave us an opportunity to walk through the apartments twice before doing any kind of closing on it, which gave us a good insight of what was there and what needed to be done. So one of the things we knew up front, like Gary's mentioned, this is a heavy lift, and we knew we needed to renovate a lot of apartments, which we took advantage of as we moved along, as people moved out. And a lot of those renovations brought a lot of value back to us. We knew the area had a lot of value add and a lot of uptick in price. So as we went along, our plan was to do the renovations. We also included updating hallways, main entranceways, outside of the building, and all that stuff was part of our original plan. And actually worked as well as we planned, and then some. I believe some of our rents were, say, in the $620 range on a 1-bedroom. We're now getting over $800, and the 2-bedroom was around $720. We're pushing $950. So everything that we originally went into with our plans executed, and turned out even better than we originally hoped.
Nice. Any issues, getting to the closing table and, up to that point?
Not really. We worked with a mortgage broker who was fantastic in helping us navigate the new area, the territory that we were working in. We did extend the due diligence a little bit, and that's where the seller was, huge. We just asked. We even offered to pay. We found some things that we were just questioning and wanted to make sure before our money went hard that we had really thoroughly went through the property. But as far as getting to the closing table, I think it really wasn't a huge issue, but raising the capital, we got a little nervous as things got really close. So we can dive into that a little bit. But
yeah, let's talk about that, because I know so many listeners are learning to raise capital, or they're trying to develop that side of the business, right? And it's such a crucial part of the syndication business, or buying commercial real estate. What happened? How did you do it?
Well, Gary, you mentioned earlier, when we first got together, we started our meetup group, intentionally just for us to help educate, teach, share, and maybe meet other individuals that have same like-minded goals. But during that process, it's interesting. We brought the people along with us on our trip as we looked at the properties, looked at different ones, started putting offers in. We shared that information with pictures and everything as we could every meeting. What ended up turning out, me and Gary originally, when we talked about raising money, we both weren't really comfortable with raising from family and friends. We thought that wasn't the route that would work for us. But by building this meetup group and bringing them along for the ride, we built a bunch of investors from that group that were willing to at least discuss investing in our deal, which was very interesting to us, because I think it was that part was a little bit easier than we thought. But then when we got down to the line of, hey, let's sit down and talk about investing in our deals, everybody that was willing to talk to us, probably about half of them did talk to us. But the ones that did, I think more or less surprised us that they were willing to jump in and do a pretty good amount. But I know when it came down to putting the money down, you have your meetings, discuss, you sign your paperwork, you want to do it. Everything kind of took longer and got closer to the deadline than we expected. And we were pushing it. We were having meetings. I think we had a few weekends we met at Panera Bread, a local place where we are. And we had from I forgot what time, Gary, from about 9 a.m. until 3 p.m. We had one investor after another just sitting down and talking with us and trying to make sure that they're good to go or they're interested in the deal. And that, lo and behold, became the last kind of part of our raising capital. But it seemed like it took to the last second to actually get every dollar we wanted, and make sure we had a little extra in case somebody backed out at the last minute. But it was definitely stressful.
Yeah. So
go ahead.
I was just saying, we ended up raising over $1 million. And a lot of that was because of the renovation work that we had planned. Even though we really didn't need all that to close, I felt we really wanted to reach that milestone, and we did. And as John was saying, we ended up really just, having some, really, we met with the investors. We're really open and honest guys, and we put all our cards on the table. They know where we live. They know everything. We're, open book. So I think just instilling that confidence in people that, hey, we're not going anywhere. And we were investing as well, our money. So that helped.
That's awesome. I like how you talked about, the things you put all your cards out there. Sounds like you are very transparent. You knew these investors and you knew them face to face, which is not so common now. Majority of our investors I've never met in person, and that sounds horrible, but that's just the way the business is. We talk numerous times on the phone. We'll do Zoom calls if they want, but it's difficult, to have that face-to-face interaction when they're scattered all over the country, sometimes in other countries as well. But I wanted to ask you, you said you raised $1 million. Congratulations, by the way. I feel like that is a big milestone because it is a big milestone. It's hard to get to that first $1 million, and then getting past that, but getting up to that $1 million is a big deal. Often, people start to raise and they may raise, 200,000, 250 or 400,000. It's really difficult for them to get on up to that $1 million until they do ramp up some different systems or do different things. But what would you have done differently now that you've done that? I know some investors are really holding out, and kind of drug that process out, which almost happens every time. But what would you do differently now?
I feel I'm not really sure that there would be much of anything different other than just, trying to branch out and bring in more members every way you possibly can, because that was our pool. And, I think at the time we probably only had about 20 members. So, we were, and we actually had some investors, I think a couple of them brought in others that we didn't know because they felt so confident. They're like, hey, here's, my friend that is also interested. And we sat down and they became investors as well. So I think just getting out there as soon as you can, having these meetups, and we use our meetups for education. We're teaching the whole process as we know it to our investors so that they feel comfortable. But yeah, absolutely.
Not too many people get referrals on their first capital raise. So congratulations again. But I think that speaks volumes just to the relationship also that you had built through this meetup. I've never done a meetup personally. I know tons of people who have had great success with meetups. That wasn't the avenue I chose, but man, for you all, that sounds like that was the avenue to be able to close this first deal, gain a bunch of investors, really build a good relationship with them as well to gain that trust, which you all obviously did. But let's talk about now, you've closed the deal. Let's move on. COVID hits. What happened?
Well, the interesting part is we closed the deal, and I think the week after COVID hit. I mean, literally immediately the deal closed, and also we're in COVID mode, which was very interesting to us in a lot of ways, because who could expect that happening? How do you plan for that in your deal? What we found was a lot of restrictions, a lot of property management wouldn't go to the property unless it was an emergency. So there was a lot of things that came to us and, kind of learn, putting your feet to the fire kind of a thing, learn really quick. And what we ended up having to do was get more involved up front. Like we were luckily we were close to the property. We were there at least once or twice a week, spending all day there doing stuff, just trying to keep ahead of the problems, which was the key to our success up to this point. Because without that, if we leaned on the property management, they were probably doing about 20% of what we wanted to see done. Granted, we're the owners, we want everything done, but they're telling us, well, even where we were, there was a lockdown on services being out there working without being emergency reasons. So we learned really hard, really quick that being close was probably the biggest benefit for us on this property.
For sure.
So COVID, what was the time frame of closing? Was it like January when COVID was kind of becoming known, or was it like beginning of March or end of March or?
Right. Yeah. We closed, I think it was like February 28th. So it was
okay.
The one thing that did surprise us, that was really nice, is that just the week that we closed or the days before, interest rates dropped. So we got a little bit of an advantage there, which was nice. And just soon after, as John was saying, all these restrictions, our property manager was like, yeah, we can't really go to the property the way that we normally have. We can't really show the units, all these leasing activities need to be rethought out. And we also had a lot of renovation work that involved all the tenants. We were going to replace all the carpeting and all the common hallways. And there was, it was an older building, so we had some air quality concerns. So we had to actually displace the tenants to get that work done. Fortunately, it was only for the day, but the bank was aware of this and kind of holding our funds until we got this done. So we were able to get all that done. And right now we have new hallways and new flooring and paint. It looks fantastic.
Nice. Well, yeah, congratulations for getting through that, even getting a loan during that time as well, because a lot of that changed for so many people. But tell us about just your most difficult part of just the real estate syndication process or business for you all, or difficult situation, during this time that you've been in.
Sure. Yeah, it was just, like you said, things went along pretty smoothly. We were able to close and secure the property. We did have to go under property management. It was kind of a requirement of the bank. Although we've been investing for many, many years, we were considered unexperienced, I guess, in the eyes of, our lender, just because of the size of the properties. Your duplexes or smaller units don't really qualify in that area. So we had to take on property management and work closely with them.
what was something that helped you to better that? Or is there a, what was your relationship like with with that property management team? Obviously, this is your first property with this team. Was there any advice there that you can provide as far as, man, this was the best property management team we could have had, or have you switched to somebody else now? And how did that relationship work out through that hard time?
Well, I think the important part is you definitely got to do your due diligence when you're hiring a property management company, but it's kind of like a marriage, right? You got to put into it as much as you can to make it work properly. And I think one of the things we did early on is we stated we wanted to have a weekly meeting with the property manager, having a phone call to go over details of what's going on, from problems, issues, or plans for going forward. We also would meet with the property management on site if possible. At first, I think we did 2 days a week for probably about the first month, and then we knocked it down to once a week, and then we went down to now we're but once every 2 weeks. But being involved with them close on everything, having change orders, repairs, just kind of coming through us a little bit more than probably should up front, so you get to understand how they do what they do, and you give them guidance on what we want, so they kind of follow what we want in the end, right? They learn our habits and our interests. And I think by doing all those things, you kind of help mold them, and you're also there to help them and hopefully support them so they kind of work with you well. And I think that was the key up to this point. We've been with the same property management. We're going to stick with them at this point moving forward. We're happy. We've kind of molded them to what we want, and we got a pretty happy relationship. So I think that's our keys we can hand out.
I like asking operators, how they prepare for a downturn or another downturn. But I'd like to know from your all's stance here, is there anything that you all did, before this deal closed that helped you to be prepared for something like COVID? And then has anything changed that's helping you, that you're, so you're better prepared for the next project as far as, underwriting or assumptions or anything, reserves, anything like that that's changed that's helping you moving forward?
Well, the underwriting has certainly changed where, you want to be conservative. And what I mean by that is you want to make sure that, when you're underwriting and you're putting in vacancy rates and concessions, that you are shooting a little higher in those numbers. I mean, everybody wants to have, 5% in their numbers, but we recommend, go much higher than that. That'll help, protect you in the downturn. Put in concessions, try to be, honest with yourself as far as what could happen, because as we've seen, things do happen. And having, we definitely dipped below the 5%, vacancy rate, but we planned for that. So, just be honest about that with yourself and your underwriting. Also, yeah, as you mentioned, the agency debt reserves are, pretty big now. So it depends on who you're going with, but they're anywhere from 12 months to a year's worth of principal and interest that you need to have, in the bank, or, in savings before you close. So that can be quite a big number to get around. So, you have to make sure that, your raise is going to accommodate those higher requirements. So yeah, as far as vacancy rates and your reserves, those things have changed dramatically.
Are you all looking for deals moving forward? What do you predict over the next 6 to 12 months in the real estate market? Are you buying or what's your plan?
We are looking right now in the Upstate market. Gary and me actually have worked together with a couple of new partners. So we're working as a team now. A couple from the Syracuse area, which is, we're both in the Rochester area of Upstate New York. And we're trying to spread out and to take on more in the area and larger properties. So we're going forward, we're looking for deals. There's obviously opportunities out there because I believe there's a lot of people out there that are concerned where things are going. But we believe there are still good opportunities to be had. You just got to search long and hard. And like you said, make sure your underwriting is strong.
Yeah, and we've purchased some tools to help us find those deals. There's tools you can buy that we've invested in to help search out property size as an example, and owners and when their notes may become due. So we're trying to reach out directly. We're doing some mail campaigns and reaching out in those manners to try to find the deals that are out there, which they're a little more difficult to find. We're finding that the deals that are under the multiple listings are pretty tough to come by to find any real good deal. It seems that everyone is still underwriting as far as on the broker side, as if things are everything's rosy, but you've got to really plan for these vacancies and debt concessions and stuff, tenants possibly not paying, and those kinds of things. So we're trying to improve our business by utilizing tools, marketing campaigns, and just trying to search out sellers on our own.
So you all closed your first syndication, you raised $1 million, all, right when COVID was hitting. And again, congratulations. About what's that number one thing that's contributed to your success?
I would say networking and working on a team. There's a lot of work to be done, and team up, partner up, as we've done. And like John was saying, we've kind of grown our team a little bit, and networking. So it's more challenging during these days, as the in-person meetings are what we really like to do. But you've got to get out there on social media and get your name out there and let people know what you're doing.
I would agree. I know partnering is probably number one for any syndicator out there to kind of accomplish their goals, but networking is right up there. And I also throw in there going to different kind of meetups or seminars or training that through a Michael Blank sense, stuff like that you can meet other people that have similar minds, that share ideas that can help you move along.
Are there any daily habits that you all are disciplined about that have helped you achieve success?
Yeah, I'm constantly looking at the numbers, looking at the reports from the property management, keeping track of potential issues or work orders with tenants. I really like to make sure that things are taken care of right away. And I know that's the property manager's job, but it's not uncommon to find me on site actually taking care of issues and talking to tenants, just making them really know that we care, and we're there for them. So I do look over, the reports from the property management and making sure that, we're keeping up on those tenant responses, and that they do know that, we're there to improve the property and address any concerns that they have.
Any recommendations on improving our syndication business or things that maybe you all have done recently to improve yours?
Study, read everything you possibly can. We listen to podcasts, constantly. Love to attend conferences. Just really know your business, understand syndication and underwriting, and just educate yourself and network like crazy is kind of what we like to do.
What's your best source for meeting new investors right now? I probably know the answer, but I want to ask you anyway to let you elaborate.
Our meetups, for sure. We do that as much as we can, and then social media.
Yeah, we like to really add value. So, these meetups, we try to bring in a guest. As we mentioned, Whitney, you were a guest at one of our early meetups. We try to educate so that, the members are walking away feeling like they've gained something. We're not going to be able to bring in enough deals to keep all the investors happy. So we're more than happy to bring in other syndicators to let them talk about the process and the business. And also we do go through the process of underwriting and looking for deals, and we share everything with them. So right now it's the meetups, and we also use social media to communicate about what we're doing. If we've got renovations going on, here's before and after pictures, just to really show people that, we're hands-on syndicators. We're not just, trying to, raise money and find the next deal. We're really involved, and people constantly comment. It's like, man, these are the hardest working syndicators you're going to find.
How do you all like to give back?
I think through education. We try to share our knowledge of syndication business to other investors, the local meetups that we have, and we try to give them as much knowledge as we've learned and share connections like yourself to them to help reach out and to learn more.
Awesome. Well, Gary, John, it's been a pleasure to just know you all over the last, year and a half, and see your progress and success. I personally know it doesn't come without a lot of hard work. Raising $1 million on the first deal, I mean, that alone is such an accomplishment. You all just have no idea. You probably do know, but I just mean that is such a big deal to have done that. And, and all those relationships, all that time spent ahead of time that maybe you thought wasn't really paying off, then it finally did pay off, and getting that first deal closed. And so many listening are looking forward to that first deal like you all were. And then amongst COVID, all those things that you've overcome, congratulations. And just thanks for sharing that process and things you've learned with us. How can listeners get in touch with you and learn more about you?
Sure. So our website or email works great for us. John and I are Rock Capital Group, and it's just ROC, kind of the way we abbreviate Rochester in our area there. So it's just ROCCAPITAL group.com is our website. And I'm, Gary at rockcapitalgroup.com. John is John at rockcapitalgroup.com. Our meetup group is Upstate Commercial Apartment Investors Group. We named it specifically like that, just so that people really know what we do and what our interest is. So that's a couple of great ways to reach out to us.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.